Week 1. Boom! Welcome, everybody, to an emergency podcast. The day before Thanksgiving. Except for the Canadians, because you guys don't celebrate it. So,
we celebrate a different time.
Different time.
Half of this pod doesn't celebrate it.
Literally half of this pod doesn't celebrate it. Welcome, everybody, to a Sofi weekly emergency podcast. While I'm talking, you guys can probably tweet this all out, and then I'll do the retweets after. Here we go. Yeah, a lot of stuff happened in the week. Obviously, we can't do an episode on Thursday because tomorrow's Thanksgiving, and I'm sure most of you will probably not join because you're with your families, hopefully. And Friday, Tevis is going to be out. So we're doing it today. There's enough news, enough stuff to cover, a lot of stuff going on. Let's start off with a high-level overview of the two major things that have happened this week, and then we will get deep into our analysis. Tevis, you can start us off.
Sure. I'm actually going to kick it to Riley, just in case. So the crypto thing and the student loans is probably the two biggest topics that we're going to jump into. But before we get into that, was there anything else this week, this week so far, that warrants a conversation or no?
I want to bring up something that we're not going to talk too long about, but the Sofi app had like a really big update. It forced everybody that was using the Sofi app on iOS to update, which is odd because usually you have to, sometimes you could still use your banking app if there's a new update and you could just update it at night. But from what Tevis has told me and from what I know from people that I talk to on a regular basis that knows more about this stuff, is that it is a lot of back end changes to the app and it feels faster. So finally, like the Sofi app actually feels a little bit more usable. We're going in the right direction.
Yeah. So if these are the signs, right, for you to pick it up. If it pushes you out of the app and then you have to re-log in again, number one, and then if you have to force update the app, they do a force push. Those are indications that there's a really big change from a back-end perspective. And that doesn't necessarily mean that your user experience is going to be different or the app is going to look different. Those are like more minor things that you can do with like voluntary app updates. But if it's a forced push, then it's generally something to do with like their database or how they're handling all like the user authentication and stuff. So if it's getting faster as a result of that change, I wouldn't be surprised at all because all the signs point to some backend change.
And their whole goal is to get on a single core. So getting off of these third-party providers for all these little niche products. And then once we're on our own core, our margins are going to get better and our unit economics should get better. I mean, not necessarily this app is doing anything in particular, but like that's exciting to see. We're going in that direction.
Absolutely. Okay, so is that it? Can we jump into the crypto stuff?
Yeah, let's get right into it.
So just to clarify on that, I am going to be playing mostly, the Steelman case, the devil's advocate in this situation. I turned my red on, so I've got, my devil horns going, and I'm ready to argue on the other side because people want to see the opposite side of things as well. So yeah, let's talk about the crypto debate. I mean, why were the senators right?
All right,
bro. What's the guy's name? Josh Sherrod or something? What's his name?
Sherrod Brown.
I googled Sherrod Brown, and this was the whitest guy I've ever seen in my life.
Thank you. That did not look like a Sherrod Brown. Anyways,
I was just like,
whatever.
This is a Sherrod Brown. What's going on?
So basically, here's what happened. What happened was these Senate members, they were members of the U.S. Senate Bank Committee. On Monday, they wrote an open letter to Anthony Noto. They basically, in that letter, highlighted a couple of areas of concern that they had around SoFi's specific crypto activity. And so in that letter, they basically highlighted some of the conditions of the bank charter, which SoFi gained in January of 2022. Apparently, as a result of gaining that bank charter, they were under way more scrutiny and they had to divest out of their digital asset business. Tanner, you can keep me honest on some of these facts. And that SoFi had 2 years to basically divest out of their crypto business. However, the concern comes from this committee or from these 4 senators that instead of divesting and ramping down that business, SoFi actually increased or accelerated that business because I think in February or March, they offered something like a new offering, for crypto. And so it caused concern under the regulatory requirements of the bank charter. And then in addition to that, the senators also highlighted in their letter some risk requirements, basically asking SoFi, okay, how do you determine risks? And are you actually doing any financing with crypto? So basically, after FTX blew up, everybody's on high alert with regards to people having exposed risk. And out of all of the firms in the world, SoFi is the one that's getting the scrutiny. But SoFi is actually the one that, sorry, I'm like going into the case now. SoFi is actually the one that they responded right away to this letter. On Monday, they released a thread on Twitter. They also released an 8K that expanded on this point. And they basically, their stance was this: we've been perfectly in compliance with all regulation. We do not have any financing activity. So we don't do any like leveraging. We don't like do any rehypothecation or any, reinvesting with your money. All we do is we buy, we sell, and we collect that brokerage fee. The actual revenue from crypto is less than 1% of total revenue. It's like 3.85 million was their total brokerage fees. Of that, crypto is a portion. So less than 1%. And we're perfectly open to have that conversation. They actually were welcoming it. They're like, hey, if you want any other details, like, let us know. And so I basically made a video on this week. And the whole stance was, this is bad publicity, because people always jump to the like nuclear option of like, is SoFi going to lose their bank charter? Because that's like the big clickbaity thing. But in my opinion, and I guess we're going to argue it here, but in my opinion, I think it's absolutely a nothing burger, because it's going to result in some type of conversation with this committee, and it might result in SoFi having to shut down, that crypto business at the very worst case. But I think that it's something that can be resolved with tweaking some of the regulations so that the lawmakers can say, hey, we actually had an impact, and then SoFi can just carry on their business. But yeah, I guess we can open the floor.
I would say that remember, this is bear case Tanner, not regular Tanner, but I would say that the absolute worst case is that our conditional bank charter gets revoked.
No way.
Of course, it's a conditional bank charter. We haven't even really been set with a real bank charter. We're allowed to operate under a bank for now, given the fact that we hold up to these conditions of, divesting from SoFi digital assets.
Okay, so let me just
wait, real quick. What would be the logic for why it's not a bank?
So basically, it would be taken away. They were like, hey, we're going to give you this bank charter, but in order for us to do that, you're under a lot more scrutiny, because like you're in charge of like lending and handling people's money. And as a result of that, you can't deal in crypto. You have to ramp down the crypto business.
This was explicitly said, you can't be in crypto.
You have 2 years. You have 2 years to divest out of crypto. And it's been like 9 months since they got their bank charter. So Tanner, okay, so let's say in theory, the worst case is they lose their conditional bank charter. However, realistically, they'll never get there, because first of all, it took them like almost 2 years to get it. So a lot of scrutiny had to go into that process. Right. And second of all, worst comes to worst, there's going to be some ultimatum where this committee is saying, hey, either divest in crypto or we're going to remove your bank charter. And guess what SoFi is going to do? They're just going to divest your crypto. It's
yeah, with maybe some penalties, some fees or fines along the way, right? And so I want to make it clear too, there was 3 things. So if I want to be very bearish about this, I would say that SoFi, I didn't like the response as much as most people did. I felt like they were skirting around the issue and not talking about the 3 issues that were talked about. There was only 3. Okay, so the 3 issues were SoFi is expanding its business in crypto when they should not be. We'll talk about that. Secondly, that they facilitate, with customer activities and allow people to buy and sell with crypto, even though we might not have the capital requirements for that. And thirdly is the fact that we let people buy dangerous tokens and securities, which is also not allowed. And so those 3 things, what SoFi went into in their response was, we don't have any, direct exposure to FTX. That wasn't part of the letter. We don't do extra lending transactions with crypto. We keep it very safe. That wasn't part of the letter. I'm being very bearish here. I watch my video. That's mainly my actual response. But if we're going to be candid, I mean, there is some good points in this letter, and it's not a nothing burger, if I were to say that.
I think this is all absolutely nothing. We had this crypto offering before we became a bank charter. We had all of this. The only thing that has changed was SoFi said, "Hey, if you want to set up direct deposit with us, and we can like allocate some of your direct deposit to crypto, and we're not going to we're going to make sure you don't have to pay any fees on buying that crypto," which is like pretty like a pretty good deal for a lot of people that are trying to buy crypto over the long period. But nothing has changed. And then
But that
also,
changed.
But
that changed.
That changed. But that, I mean, like the argument of that. Okay, the whole reason this whole thing came about wasn't because SoFi did anything different. It's because of FTX. And then these four senators, I don't know who they are, and I don't like to get political, but it sounds like they're kind of opportunistic. They're using this kind of flow to like gain favor with voters in their local area. So whenever this ever comes back onto a stage event, or like if they have to, I don't know, like debate about this subject in the future, they could say, "Hey, I voted to like stop SoFi from doing this shit." So like,
what I would say is opportunistic is the difference between opportunistic and wrong. Just because they were opportunistic and actually took, a really, really good chance to go after SoFi, does that make their case wrong?
So,
and it makes it shady, but they could still have a case.
And absolutely, Tanner, and I agree with you on that. And I think that a large portion of this is like, I wouldn't say virtue. Well, I will say virtue signaling. Actually, fuck it. It is virtue signaling from a lot of these senators because they want to be seen as having a hard stance on this stuff, because a lot of people lost money in that FTX blow up. And while I think that FTX is not, they didn't explicitly say that, it really is a focus area, at least in the letter, because they start off the letter talking about FTX and how that blew up. And then question number one was, do you do any other financing activities with crypto? Is it just buy and sell brokerage fees? And so I guess that's why SoFi in their thread, first of all, addressed FTX, and second of all, addressed how much money they actually, or how little money they actually made from fees. And they said it's only brokerage fees. We don't do anything else.
Yeah, but it's what I find is that, okay, sure. But the problem is I didn't find that they really addressed the expansion part, which I think was the big smoking gun. And whether you want to, do you guys think it's an expansion of crypto? Do you think it's a new service or offering?
The direct deposit thing?
Yes.
No, I mean, you had the choice. Okay, like SoFi's crypto product is super vanilla compared to like the rest of the industry.
But it doesn't matter. It doesn't matter. It's just, is
like
that part an expansion of what they already had since they've gotten a bank charter?
I don't think so, because like you could buy and sell crypto whenever you downloaded SoFi before the bank charter, and you could do the same now, but you have a different way of doing it, and that's automated. So is automating crypto purchases like that big of a regulatory issue?
Maybe not. But in SoFi's own wording, and this was addressed in the letter, they said the company's public billing this service as the latest expansion of SoFi's offering to make it simpler to get started with cryptocurrency investing. That's what they called it. That's what SoFi called it. Remember, I really want to be clear. This is bearish, Tanner. Okay, so I'm not trying to do a gotcha.
I have a question. I have a question. So JP Morgan and Bank of America, they don't allow any type of crypto trading.
No, more news broke recently that JP Morgan just filed what is it? The JP Morgan wallet. Did anybody hear about that news this week?
Yeah, but the problem is that they can have a wallet. So it's very different. There's exemptions that are used to enterprise level institutions that ask for that exemption.
Yeah. So well, there's a distinction there. Is that because there is an exemption made and that was a part of a negotiation, or is it because they're a permanent bank charter and we're a conditional bank charter? Because that is a distinction to make. Because if we're just conditional, then okay, that's fair. But if there's an exemption, then I think if we just follow this rabbit hole of like the bearish case, then it'll probably lead to some back and forth discussion. And either it'll fork. Either we divest from crypto altogether, in which case we still have 2 years to divest from crypto. Like nothing is like no drastic action is going to be taken to the downside of the bank charter in the next 2 years. We've only been having the charter for 9 months. So either that's the route, which is negative for SoFi, of course, because crypto is one of their offerings, or we have some type of arrangement with the Senate committee to include that crypto offering as an exemption included in the bank charter. And so this is why I say it's a nothing burger. It's because both routes are seemingly insignificant when you go to the nuclear option of like they'll lose their charter.
But we were already told that the problem is that we were already told to get out of crypto in 2 years, or January 1st, 2024 is the exact date, with an exception of 3+ extra years of extension if needed, with regulatory approval. But the problem is that what if we broke our lease? What if we did something wrong, which wasn't part of the condition early? It expanded our service, and that's sort of the part where it's like, okay, well, does that mean we're still on track for January of 2024? Or does that mean they put down a hammer and say, you know what? I don't know how big of a slap on the wrist it's going to be. I mean, the stock did not drop, 50%, right? It was a very small move to the downside. So there's a little bit of worry because obviously no one likes to get attacked by regulators, but also, for the most part, most people think this is a nothing burger.
I think that, yeah. And then also, like, we're hyper focused on SoFi because, I mean, we do this weekly, but like the rest of the crypto world is burning to the ground right now. And we're just like, we're caught by proxy. Like, this isn't as scary as it is to some other
But it had nothing to do with the latest crypto crash. Like, I mean,
I don't know. I mean, would they brought this up?
Optimistic about that, but that's not even what they're not saying that the, this has anything to do with the recent decline. They're saying, you broke your lease. Yeah, sure. We waited 8 months to bring this out, and that is really shady, but that doesn't make them wrong. That's the problem. Yeah. How do you tell JPOW and say, you know what? Sorry, Federal Reserve, but they waited too long, and there's no statute of limitations for 8 months while they're sitting on this case.
Yeah, I mean, and they could have just brought it up in 2 years, like with a month to go on the runway, and say, hey, by the way,
Sure.
Where are you? And like even that would have made more sense. But now, again, I think so. You have to tackle it. Okay, what is the resolution, which I think we talked about, of that forking, and they have plenty of time to get to that resolution. And then you have to talk about like what is the actual thing that they did wrong, or what supposedly, which in my mind is BS, but what supposedly sparked this was the fact that they offered, basically an automation service with regards to that direct deposit. So a couple of months after, they said, okay, part of every direct deposit can go into digital assets with no fees. Like, and we can argue this all we want, but like in my opinion, that's not a new product. Like, it's not like, oh, we introduced 30 more shit coins for you to invest in. It's just like, hey, you're already doing it manually. Here's an automation. So yeah, I'm biased. I agree, but I don't know.
So I have one question. Was SoFi ever planning to get rid of crypto over the next 2 years in order to meet the condition they got when they got the bank charter 2 years ago?
I don't think so. I think they were looking for expansion or extensions, and to work with them to a point where they could get that,
And so if the FTX shit didn't happen, you'd think these senators probably wouldn't have cared.
Yeah, because I mean, they mentioned it in the letter. Like they didn't say the word FTX, but they talked about the
recent.
Oh, they did.
Recent
they named
volatility or whatever.
Yeah, this is. I don't know. We're just caught by proxy. Like the whole argument about this direct deposit to the crypto side of like SoFi, that is just such a small like slap at the wrist of like what you could have been caught doing in the past like month and negative headlines.
Plus,
but,
like
there were 3 conditions for SoFi's bank. 3. That was one of them. So it's not insignificant. I don't think it's like this was one of the 3 rules to make our bank charter actually hold up. And so that's why I'm not, like I said, I'm being very bearish. I want to keep saying this because new viewers are coming in and they're like, why is Tanner flipped? I'm not flipping.
But like SoFi had crypto the day that they had a charter and nobody cared.
Right. But they expanded it.
I don't know if that's called an expansion. I think this is a loop because I guess I'd have to be a lawyer to actually.
So was SoFi, and I guess this is a question for the group, but like SoFi is the only bank charter I know that was handed out in January. But I know that right before in 2021, I think Lending Club and Square both received bank charters, either 2020, 2021. So where's their letter?
So I've been hearing this on Lending Club. I don't actually know if they deal in crypto. Like I don't know Lending Club very well, but also Block doesn't have a bank charter the way that SoFi has a bank charter. They have a loan approved bank charter. They can't do what we can do on the financial side. It's quite different. We have a fully licensed bank charter. They have a partial, depository insurance bank charter for their loans. It's very different.
Got it.
I think it comes down to one simple question. Sorry, I'm almost done.
Yeah.
Did Anthony Noto and the leadership team
you should highlight that
talk to the regulators before they did the direct deposit thing? Because I feel like that would be a huge misstep in like actual leadership. Because like all you have to do is ask, and they can say yes or no. And if they said, I mean, like if they didn't ask and they did do it, and then they got their tails between, I want to sell all my shares. But like I don't know. I don't see a world where they spend 2 years trying to get this bank charter, and then they're playing around pushing the border or pushing the envelope of what they can do.
Right. And so that was definitely the best retort that SoFi said, is that they've been in constant and concise, conversations with regulators the whole time. That's by far the best thing that they could have said, because that means that, no one was worried the whole time, unless maybe they weren't in as concise of a conversation as what they're maybe giving out to be. But another part of this is that SoFi is offering unregulated and dangerous tokens and securities. I'm back and forth on this one. Does anyone know about this? So
what are we offering besides the basic ones?
Don't they only have like 30 coins?
Yeah,
we offer a lot compared to a lot of places.
So the only reason this matters is because, again, Bank of America doesn't offer this. Robinhood does, Coinbase does, but because they're a bank and we offer it, that's why. Because the 30 coins are offered in a lot of places, right?
And it's like, where do you draw the line at like what's risky and what's not? Like you could have somebody say, "Oh, you offer Bitcoin, like that's risky," versus
Bitcoin's. Of course, Bitcoin's risky. That's insane, right?
So first off, tokens, whenever they get really big, obviously not these crap coins or whatever, but as they get big, they are decided on what they are in terms of a regulatory standpoint, like Bitcoin, Ethereum, all these ones.
What's the size threshold? Do you know?
I don't. What I will say is that the company's policy on cryptocurrencies, this is SoFi's company policy, that in order for them to be listed, they have to align with SoFi's values, such as promoting financial inclusion and economic freedom. That's that's a quote in SoFi's book. Okay.
Wow. Really? I didn't know that.
In the second part, in one of the tokens that is listed in SoFi's digital assets, they call it word for word a crypto pump and dump, and has no special use cases or features. So this is one of the other parts that the senator brought up, saying that, SoFi is just being a little bit shady in the way that they're promoting these tokens, because one, they're saying that it aligns with their values. And also, secondly, it's a pump and dump. They state it as a pump and dump, and it's useless.
I think to your point, it is kind of, I wonder how, like I said this like a couple pods ago, like 3 or 4 weeks ago, it is almost guaranteed SoFi is going to be running into regulation. There's going to be a lot of rules and stuff. Like their app, like if you go through the home feed, they show all their products. Oh, like here's a crypto offering. Here's get $5 in SoFi points as soon as you start your crypto thing. I don't know if they'd actually do that, but they do all this cross selling and they kind of advertise within the app. So in the long term, I think that there could be a time where we get some regulatory like action towards us, just stuff that we do inside the app.
It's totally normal and expected, guys. Like they give us a bank charter now that opens a door for them to scrutinize and just give us shit for everything with regards to the bank charter. It's within their wheelhouse. But here's the thing, though, and because we've spent like almost half an hour just talking about this. The thing is that I think that a lot of these regulatory bodies are very disjointed and have little communication. That's a bias on my part, and check me on it. But if you talk about the senators or that committee, I guarantee you that SoFi, the reason why they put, hey, we've been talking to regulators all along, is because they've guaranteed check this. If that's a huge part of their offering of their business, they're not going to make marketing materials or content to promote that crypto side of their business if they're just going to divest in 2 years. I mean, just thinking logically, it doesn't really make sense. So my bet would be that they've already gotten the green light from some regulatory body that hasn't had that communication, or anyways, like in other words, it's going to get resolved in a conversation format. Maybe they just remove those coins that have no utility or whatever it is. But ultimately, I still think that, again, nothing significantly material to the business will come of it.
Right. And I think that's a good point, right? Is that I think being a bank charter is even safer than before we had a bank charter, because those rules are put in place to have, more regulatory bodies looking over us, and that should be a good thing, right? So it's probably less of a chance that we run into some sort of issue or something along these lines. Are we good on this subject? I can switch it back to green, and well, maybe I shouldn't switch it back to green before we talk about student loan moratorium. I mean, come on, but yeah. Does anyone have any extra things that they want to talk about on this issue, the crypto issue?
I think it's there's nothing more to be said.
Any comments, anything like this that people want to worry about? Should we worry though? I mean, that's what investing is all about. I mean, there's no clear, concise answers, or else the stock would double or go to zero.
Let's say they have to get rid of crypto to be a bank. Because if you had gun to your head, right? Be a bank or offer crypto.
Easy.
Bank.
Right? Okay. So we get rid of crypto. Aw, you can't trade your Bitcoin anymore. Like, is it the worst thing in the world if you can't,
Yeah.
I mean, they're what, 0.02%, Tanner, I think you mentioned, was their crypto activity? Like,
it's extremely small. It's extremely small.
I guess crazy. I guess the last thing I kind of want to ask Tanner or the group is, like, they're going through Coinbase for this, right? So they're only collecting a brokerage fee. So aren't they necessarily like just the facilitator for that? I mean, they're not offering, like, they're not buying Bitcoin and offering it themselves, similar to, like, what Robinhood might be doing or what Coinbase might be doing. Isn't it the same as the insurance offering that we're having? Like, we're referring someone to Lemonade, we're collecting a fee, like, in principle, I mean.
Yeah, in principle, it's the same, but not the way that the Federal Reserve looks at it.
I want to bring up one of the a quote from the actual letter. It says, in the event of a crypto-related exposure at SoFi Digital Assets, ultimately requiring its parent company or bank holding company or affected national bank to seek emergency liquidity or other financial assistance from the Federal Reserve, taxpayers may be on the hook. And I'm just like, I mean,
yeah, that's rich.
It's just so charged language for political language. It's just, it doesn't, I don't know. So
there was another part about us not having the total capital requirements for these cryptocurrencies, but the truth is that I can't even, it's really hard to defend, and it's really hard to attack that point, because we just won't know unless, I'm sure Chris Lapointe knows, and I'm sure Anthony Noto knows, but there's not a lot of people who would actually know that. All right, let's move on to
student loans.
Yeah, so we've been talking about it for a couple of weeks.
Well, I mean, I can introduce what Tevis. You got it.
We've been talking about it for a couple of weeks. Basically, the entire crux of the issue
I'm going to change out of my bear suit.
Was around the legitimacy of whether Biden could, or the administration, as I say, could or could not make the moves that he did. Essentially, the statement was the fact the Texas judge, the federal judge out of Texas, the 8th Circuit District Court of Appeals, all they were arguing was that the HEROES Act, which Biden drew the funds from, he did not have the approval required in order to make that judgment call alone, that he needed congressional approval. And then he didn't necessarily go through the right channels to do that. Now, the majority of this issue is regarding the actual loan forgiveness. So $10,000 or $20,000, depending on the actual borrowers. 26 million people are eligible. I think 16 million were already had already applied. Where this catches us is the second part of that announcement, which was made all in one announcement, which was the student loan pause that was supposed to resume in January, now got pushed back to June. Why? Because now this whole issue is going to the Supreme Court, where the administration feels that they were legally in the right to do this. And I mean, the pushback has come from a lot of Republicans, a lot of other federal officials. And so essentially we have to wait until the Supreme Court decision in order to resume student loans. But this is, I think, the 9th official pushback of student loans. This is why Anthony Noto last week in the city conference was very shaky in terms of his confidence level of this resuming in January. And I think the bear case is also, if we're going to be beholden on a Supreme Court decision, I don't think it's going to be June, personally speaking. I mean, again, biased here, but how disjointed government is, I feel like that Supreme Court decision is going to get pushed back. And now we're actually beholden on this decision to resume the loan forgiveness.
Yeah, nobody wants to be the person that brings back student loans.
Yeah. And I should sum up one of these things in the city group, fireside chat. This was a little quote that I thought I'd pick out from that chat. Whenever asked whether he thought that the student loan moratorium gets pushed or not, he said, whether student loan moratorium gets extended or not, we're going to deliver really strong growth if we're in an economy that we expect it to be, and which is a little bit more dour than today, but hopefully not overly dour. The thing is that he knew this was coming. If it was so finalized, why would he even talk about it being extended at all? He's definitely heard chats going on. And the thing is that our personal loans, this has been going on since March of 2020.
Mm-hmm.
Okay.
Over 3 years.
Over 3 years. That math doesn't make sense to me.
Well, when it's expected to actually end. No, when it's expected to actually end, mid-June is March of 2020, June 2023, over 3 years.
Right. Okay. And, we've still been continuously growing. I mean, honestly, student loans forever for me was the big cherry on top. Honestly, it was a whole second Sunday. I'm not even going to lie. But but the thing is that our business is still great and we're still getting very close to tangible book value. And you know what? It's still a great price. And honestly, my question to you guys, because I keep thinking this, is that if we're able to hold this up in court saying that the actual student loan relief can be indefinitely blocked because they think that some states require this income to stay with their normal facilities, is that how is this extension not also impacting, their ability to get back on track, like Missouri? Missouri.
No, I was just about to say.
Sorry, I was looking at the chat. Can you just repeat?
I wanted to highlight this thing from the chat because I think it's super important. Chris says having so many personal loans on the balance sheet is not good. He said the bigger question you should be looking into the growth of personal loans. I think we addressed this many times.
I think he's 100% wrong.
Chris posted something on the FICO scores with Sofi. I guess we can jump into that after.
I'm going to pull it up right now. Yeah,
let's jump into after student loans, because I think that's actually good. And I was looking at that. I'd love to get everybody's take on it. So thank you, Chris. Look, I think student loans, it's Anthony Noto said we're going to do fine in 2023 with or without it, because personal loans is a good business because they have good margins on that business in 2023. Student loans, obviously, it was a massive positive if they can get it back. But even if not, who was it? Last week on our pod, our guest basically, Stephen basically said that, hey, look, if it gets pushed 6 months, it's fine. If it gets pushed 12 months, it's fine. All it's doing is it's delaying the time to SoFi's inevitable growth. Student loans is still a fundamental part of their business. They're still going to be offering student loans. There's not going to be people are still going to college. They'll still be going to college 5 years, 10 years from now. They'll need to refinance those loans. And so all it is short-term bad news. Why? Because it delays the amount of time until we can actually go up. I think in the very short term, one of the things that is the most direct impact is how big that refinancing boom will be in Q4. Because last time the refinancing contributed to our best ever quarter, Q4 2021, because student loans were pushed back late in December. Whereas now they're pushed back in November. So we have a full month and a half, 6 weeks essentially, to negatively have our refinancing affected. So that's what I'm going to be looking at in the Q4 report. But
Yeah, I'm seeing a couple things in the chat that I want to address. They do make private personal loans. So someone asked that. They do originate private personal loans. Another thing that's brought up is securitization. Okay. Securitization might be the largest tool for correcting a balance sheet whenever we find ourselves in a hard time. SoFi just recently got the ability to be able to sell ABS or asset-backed securities onto, a public market for fixed income purchasers to actually buy, like institutions, trust funds, these things.
Can you explain what ABS is, like high level, real quick?
So asset-backed securities is the ability to sell the loan contracts, the actual money of people paying us back, but they also take all responsibility of the loans. So the default rates, anyone that's not paying back, if someone, if it's an open loan, if they pay all of it back, that's all going to go to the new owner of those contracts. We just are going to still facilitate those loans on our platform. So you as an actual, SoFi user that has a personal loan, you're not even going to know that your loan was sold. Some companies actually tell you, which is quite interesting. Like they say, hey, we sold your loan, which I find that's funny, but I'm going like out of focus for some reason. But anyway, the idea is that once we sell it off, it goes off our balance sheet. Okay. We get cash in return for those, for selling our loans, and people get, a nice fixed income product where they can actually, accept money over time. But in a big banking area where we're selling, tens of thousands of loans per quarter, we want cash now so then we can go back out and remarket and resell again. The interesting part is that, did I miss anything, by the way? No? Okay. So I'm just going to continue. The interesting part about our personal loans is that we deal with some of the highest end clients. Okay. Which means that plus with SoFi Plus, we're at some of the cheapest rates across the board. Okay. So these aren't high risk, types of products that we're giving out. SoFi's ABS product got rated at a AAA, the highest rating that you can get for your loans. So whenever you're actually talking about a true credit crunch and people are starting to, not borrow anymore, start to default on their rates, if you remember from any of the movies that they've ever taught you, it goes from junk bonds all the way up to AAAs. AAAs are the last ones to get hit. So we are far from any sort of credit crunch that's going to happen, and we will be the last ones to possibly get hit.
So I think maybe this is a good time to talk about the image that Chris put up, and maybe Amit, while you're finding it, I can answer some of these questions around student loans. So first of all, for Eric's question, how can you say it does not matter? SoFi's share price is sinking. Look, there's a big discrepancy in terms of what happens with the stock and what happens with the underlying business. And when we say it doesn't matter, we're talking about the underlying business because we are investing in SoFi and holding it for many years. And that business is still going to keep growing. I mean, student loans still grew in 2020, 2021, 2022, regardless of that moratorium. So that's why we're saying it doesn't matter. Of course, share price sentiment is the most important thing in the short term. And then second question, invest to live. I'm bullish on opinions, but what are the facts? What is the dollar value of market cap for student loans? Add crypto, add personal loan risk. I think if we had to rank those, the student loans and the personal loans would obviously be a much larger percentage of that total originations. Crypto is very, very, very minor and very insignificant in the grand scheme of things versus our lending products. With regards to student loans, they did about $2 billion in originations in 2020 before the moratorium, and they're doing about $1 billion or $400 million after the moratorium. So we're at 25% of originations before that moratorium hit. So that's some of the numbers for that. And then,
I just talk about that really quick while we're on it? Is that even the idea of talking about our originations where they were back in 2020 is such a fruitless idea because we're buying shares today, unless you have been holding since then. But if I'm talking about someone who's buying today, is this stock still worth it today? Then you have to look at our originations of where they are today. We are a personal loan company, not a student loan company. Our guidances are guiding with zero growth in student loans, zero. Okay. That'll probably be the same case for 2023, especially with the news that we just got. And so you really have to look at it the way that we are now, rather than, oh, well, we used to be a student loan company. I mean, it's not a part of our business right now. And that our valuation currently is showing us that.
Okay, so this is the chart, I believe, that Chris
he also
tweeted
put up
out.
Chris is going to have to come on and actually give it to us straight. Because
it's definitely a pain going from text side.
Yeah, and also like he's also the most credible bear I've actually dealt with on Twitter.
Titter. What websites are you going to, my brother?
Freudian slip.
What's going on? Titter. Okay. Wait, this is the thing, right? This is the right one?
Yes, but I can't explain it.
Chris,
like,
Chris, you had a chart about FICO scores. Can you just DM it to one of us and we'll put it up?
So basically, like if you go down the pictures, you'll see that like if you look at our I can't explain it, but it looks like we're lowering the FICO scores of like our loan originations
of our credit cards.
It was basically a comparison of December 31st, 2021, so the beginning of 2022, and I think June of 2022, so that 6-month period, and it had all of the FICO scores from 800 to like 700 to 600, and it showed that in the beginning of the year 2022, we were only accepting like 700s, 800s, so really, really, really amazing credit scores. And by the mid 2022, we were also expecting, I think the lowest column there was like 640 and in big numbers. So when Chris sends us that, we can probably put that up.
I can tell you guys a little bit about, our FICO scores for personal loans, student loans, everything like this. So in last quarter, student loan FICO scores were 771. Home loans was 747. And personal loans was 746. Which is all considered a prime customer.
Amit, I just sent you the thing.
We're also going to have to touch on SoFi being at the lowest valuation ever in its entire.
And we're going to have to touch on how Riley tweeted that and got like 1 trillion new followers in one day.
What in the world happened there? That was crazy.
Oh, Chris wants to come on. Okay, I'm sending you the invite.
He's coming on right now.
Yeah, so I'm going to share this when you share, Chris.
I'm excited.
Chris is about to join.
Just so that we don't have dead air time while you're inviting him. So credit cards is what that's showing off in our FICO scores. And like he said, I mean, maybe I should just wait for him to come on because he brought up a good point about delinquency.
Yeah, until he comes on, let's talk about Riley being the new Twitter SoFi influencer of.
I'm sorry.
I don't think I am. I don't think I am.
Oh, the Titter influencer. That's a different influencer.
There are some people on Twitter that actually DMs Noto often because Noto is following them. But Noto, I don't think Noto's interested in following me because I don't necessarily praise SoFi as like I never refer somebody to their banking product. And I if like the news comes out, like I posted all those letters out for everybody, and he responded to that with SoFi's retort. But I don't know. I don't think he's gonna follow me anytime soon.
He already follows me. It's not really
you're
a big deal,
kidding.
You know?
You're kidding.
He follows me. Yeah, I thought you knew that. What? He followed me in like January, bro.
Dude, are you
like,
serious?
Thanks.
No, you're messing with me.
Yeah, he was.
I just
really
lose
he liked all my analysis on Palantir, and for some reason,
I just lose all faith in humanity when I hear shit like this. Is it because you said
I don't
yo
believe
to him?
I don't believe him.
Yeah, it was the yo.
Yo, I was like, yo, can you be on the pod? Someone's like, oh, Amit, that's not how you get a professional. I was like, shut the fuck up, bro. If he doesn't come on the podcast because it said yo, then that's the wackest CEO ever.
Kelly, that's not the point that he follows 300,000. I think he follows like 16,000 people, but they're not me. Okay. So
yeah, bro, he could follow 1 million as long as there's 8 billion people. There's 350 million Twitter users. I'm one of the people he follows. That's all that matters.
I don't think he's gonna ever follow me because I think back in like 6 months ago I made a joke about his name saying like no dough.
What was the joke?
Like no dough, like dough as in money. Because like the stock price is tanking.
Well, he's never gonna follow me.
It is now.
He's never gonna follow me because I'm not verified. I'm a fucking pleb now. So
oh, you have an Android too, or what?
No, I just don't want to pay $8.
Wow, Sanders,
right.
you said that out loud.
Yeah, I'm a proud Google owner. Okay, I've got Google Pixel, and you guys wish you you had this phone. It's awesome.
Oh my God.
Okay, I'm
actually worried about the backlash of that.
We're waiting for Chris, but maybe one of you can give the high-level explanation for why these FICO score, why he tweeted this. He said, growth at any cost, even lower credit quality standards is not a good look. It's small, but if still not a good look, if the macro goes south, at what point do people default on their loans and SoFi goes bankrupt?
Look at 640
I think he said,
from
I think he said it right.
2021 to 2020. I think that if you look at it, it says in 2021 we had 707, and then it jumped like drastically up in 2022. I don't know what that means, but I remember him highlighting that.
You know what? I think it's a good point. Is that there's two different sides to this argument. Whenever I look at SoFi, and what I always like to balance on SoFi is there bad news in this company? Yes. People who tell you no, I think I've got a very hard time with believing any company is that bullish that doesn't hold, insane levels of in terms of their valuations. But whenever it comes to sorry, Chris, did you hear any of that part that I was just talking about whenever it comes to YouTube?
No, I didn't.
Okay, so
welcome, first of all.
Welcome, Chris.
Don't say welcome. Not yet.
No, I was just saying that I'm also not saying that there's no problems with SoFi. I think that any stock that's being held at this valuation obviously has its problems. I think that the main thing is that the problems that SoFi is holding is not equal to how cheap it's being traded. So let's say if we have a 80% off of what I think the fair value might be, there's a 40% problem, but I still think that there's a margin for success.
So you're saying there's more opportunity basically because of that delta.
Absolutely.
Yeah. And look,
so tell
I
us
think
what you have here, Chris.
Say that again.
Tell us what's on the screen.
Well, right now you're seeing the credit card quality of SoFi. So SoFi doesn't exactly have a very big credit card business. So essentially, they don't do as much consumer credit. But you can see here that the number of FICO's loans, well, not loans, but credit card debt that is in the higher FICOs is really low. If you look at down at the bottom, it's excessive, right? Especially under 640. So if you're looking at the total origination, almost 25% of the credit card debt that they have is under 640. Anything below probably 750 is not good, and especially during bad economic times. Whatever people say that, oh, FICO scores at the end of the day are a projection of what's going on today with consumers' credits. At the end of the day, if the economy goes south, even if you have a 750 FICO score and you had a $100,000 job last year, guess what happens? That shit is going to drop. The other thing that does make absolutely no sense is to have almost, what is it? Like, I think 8 billion or was it 7 billion in personal loans? Where are these people with high FICO scores going and borrowing money at 12.5, almost like 12.25%? Like, it just doesn't make sense that you have someone with a high FICO score, high income, and they're relying on a company to do personal loans. You have most people with that high of FICO scores, they're going to be doing things like taking out equity loans on their homes, right? Because that's going to give you a much better rate than this double-digit nonsense that all these personal guys try to do. There's so many companies that try to do personal loans like that. So all I'm going to say is I'm not saying that there's any foul play. By no means am I saying that. But I'm saying is their business model is set to be very profitable during good times, but may not necessarily hold up for a recession or an extended recession. And not to mention, if you think about it, this is not a space where, they're like one of the few people that are in there. Dude, you get the biggest banks in the world competing to get business. If you think JP Morgan is not like, okay, you know what? We can issue, we can find all these people with personal loans that are high FICO, with high FICO scores, and we're going to lend money out at double-digit rate. They're not going to do that, and like I said, I don't know exactly how SoFi is going to mitigate that risk, especially considering majority of the loans, especially in the personal space that they're holding on their balance sheet. That's the other risk that I see. Like, the fact that they're not getting it off their books is bad, because if these things go south, which could possibly happen in the next, year, 2 years, what's going to happen is they're going to have to do chargebacks. They're going to not chargeback, basically write off the debt. So if you look at the debt that's in, especially if you look at one of the slides that I had, If you want to go to my Twitter real quick and just pull it up.
So, Chris, I just have a couple of questions on that
Yeah.
first chart. I'm just an assumption. You got that off of SoFi's. You got it off the 10Q or?
Yeah.
Okay, and then credit card. So this doesn't include personal loans. It's not their lending segment. It's just credit cards, right?
Yeah, that's just credit cards. But
Okay.
before you go into that, go all the way up first, Amit. So click on that. So this right here is the historical delinquency rate of all consumer loans. Okay. So these are the type of loans that you're looking at when it comes to SoFi, right? You can see here that we are at almost at an all-time low of default rates, because people who get consumer personal loans are not exactly the greatest creditors. Okay. Most people, they turn to personal loans because they're in a hard up position where something happened in their personal life that they have to deal with. And especially people that are like, especially considering if they're getting loans at like 5, 6, 7 years, if you look at the total amortization, how much money they would end up paying, like if they literally just, kept paying all the way throughout the loan, it would be crazy to have that much interest go out the door. Most smart people, especially people with high FICO scores and high incomes, would not go the personal loan route. The minute they saw a 12%, like APR, they throw that shit right in the trash. I've gotten plenty of SoFi offers in my mail because I actually had a SoFi mortgage 2-3 years ago, and believe it or not, that was actually good. They made the process very easy. It was seamless. I didn't have to deal with too many things. Like the entire closing process was amazing. So I do think the company has something in terms of customer service, but they're chasing growth. And what I don't like is when a company chases growth and starts to cut corners, that's bad. So yeah, just that's the reason why I'm a little bit iffy on these guys. And you can see that.
So
I would say, yeah, go ahead. Sorry.
I feel like there's like 6 points. I want to slowly address them, or
Okay.
at least, just to some degree. So, one, first of all, I think that the point that you said that, I know that you're not accusing SoFi of being shady, but I think that we should scratch that off the record entirely, that maybe our FICO scores might not be real or something along these lines, because if you look at our competitors, they are all doing the same thing. Very close rates, very close delinquency rates, also with bank charters. Look at Lending Club, for example. They charge higher interest rates than we do and still hold up a very good credit score. And both Lending Club and SoFi both have fully chartered banks. So obviously we're being regulated at the highest level. And lastly, we are also going after they are noticing that the two biggest purchases that people are doing with our personal loans is debt consolidation. And secondly, they're also doing solar loans. So then people can get increases on their house. Now, whenever you look at our actual, annual incomes for these people that get loans, I think Sean said it in the chat. There's a difference between high income earners and wealthy people. The truth is that as people make more and more money over time, they spend more and more money over time. They still need access to capital the same way anyone else would. I mean, obviously their default rates are lower and these sorts of things, but I think SoFi is showing that.
Guys, unfortunately, if you are a wealthy person, you have more access to capital than anyone else in the world. Not to mention, most people that are wealthy have assets that they can use as collateral to get amazing loan rates. I'm telling you, the only.
But I'm not saying they are wealthy.
Yeah,
I'm saying I think they make a lot.
Well, even like I said, even people who are going to have additional income, they're not going to say, let me sacrifice 12% of it to borrow this. And trust me, if they have high incomes, they have multiple sources where they can reach into to get, to get credit. Yeah, go ahead. Sorry,
I was just going to say, so there must be some sort of like, I think if you say that, then you are saying that what SoFi is putting on their books is cooked in some way, like as if they're not saying the truth.
I'm not saying they're cooking the books by any means. What I'm saying is they are doing business based on what's current right now, what's today, right? They're not necessarily looking at the bad economic times that are coming. Or actually, believe it or not, I think they are. That's one of the reasons why they're increasing they're trying to get as much depositor cash as possible so that this way their balance sheet can be as healthy as possible. So if you guys notice, SoFi offers one of the highest APRs on a savings account. Why? Because they're trying to raise as much capital because that's how banks work, right? They take money and they lend it out, and they lend it out at a higher rate. Well, guess what? These guys are lending it out at 12%. They're borrowing at 3%, right? From the consumer. So that's one of the reasons why they're pushing to get their balance sheet as like rigid and as strong as possible, because there could be a wave of defaults or coming in the future. So these delinquency rates are the thing that I would say people have to watch out for. Like I said, I'm not saying SoFi is bad by any means, but their business model is not made for bad times. Open Door is the same situation. Open Door has a really good business model, but it's built for good times. The strongest companies are not built for good times. They're built for bad times, as Palantir would say, except Palantir hasn't necessarily proven that, just to be honest and fair. That's one of the
Chris
things
is just a bear for everything. Chris is just short everything. Is like
No, I'm not.
I have a quick question. And you said you were a SoFi member at one point. Do you have the app? Do you look at it every now and then?
No, I don't. I only had their mortgage product. Do
you think there is something to be said that they have behavioral data within the app? They have direct deposit data. They have other types of data in SoFi Relay where they track every asset that one of their users has. Do you think that they would be more agile if push comes to shove, like something bad happens?
Dude, if you lose your job, no matter how your behavior was a year ago, is not going to help. Right now, the Fed is pushing people into a really bad situation. That's the key. When the economics go south, how are they going to manage? A lot of this is going to depend on how Anthony Noto navigates this downturn. And if they're able to survive, they could actually come out ahead at the end of it. The question is, as you guys being investors, do you guys trust this company enough to put your capital and say, you know what? I think this guy can navigate this downturn. And this way I can see that exponential return in the future. But once again, personal loans, in my opinion, are not a great place to be.
So, Chris, I'm listening to everything you're saying, and it does make sense. I guess I just have two questions. Number one, how is what SoFi is doing different from what every single other bank is doing as a result of the macro? In other words, if all financial institutions are taking on riskier bets because the interest rates from the Fed are higher, then is SoFi doing anything specific that is out of the norm? Like, I understand they're taking riskier bets. And then number two, I'd love for you to sort of like tackle both. Number two is
well, before you go to the next one, because I'm terrible with keeping up with multiple questions. So other banks are not doing personal loans at the level that these guys are, where majority of their revenue and income is coming from this specific segment, right? If you look at JP Morgan, you look at the Wells Fargos, you look at these big banks, they have way more diversified business, right? The problem is the concentration risk that is being posed to SoFi with just having so many personal loans. It'd be one thing if personal loans only made up, like, let's say 10, 20% of their overall business, but this is getting to the point where it's becoming so much. And if you look at anyone in the personal space, right, the personal loan space, everyone's been slaughtered. Look at Upstart, look at the lending company. There is not a single personal consumer loan company that has done well over the last 2 years. And this is during good times. This is during a good economy. Imagine what's going to happen during a bad economy.
So that's a great answer. And it brings me to my second question, which is, on that chart, we just saw credit cards, and credit cards is a very small offering from an origination perspective compared to personal loans. Are we saying that, is the common conversation here that saying, okay, if credit cards are being offered to 640s, therefore personal loans are also being offered to 640s? Is that like the
Not necessarily. That's
is there a world where credit cards is more risky of an offering than personal loans is? To which point,
they're both unsecured debt. The thing with credit card, especially when it comes to high net worth, high income people, the reason why they use credit cards as opposed to, let's say, personal loans is because credit cards, you literally get some level of benefit from using it, right? So it's literally, you do it, you get a % off, whatever. The credit card companies make money on not just on the interest, because they're believe it or not, they make, especially companies like American Express, they're going to make money on the fees that they charge the merchants for processing the transaction. with personal loans, it's not as simple as that. Personal loans are way more risky. Even credit card debt, believe it or not, is super risky. But credit cards are like, if you have, like, let's say a borrower for credit cards, that's like a contract that you have for 5 years. That's not good. These personal loans are extended periods of time. So once again, I would say that I don't know, because I haven't necessarily dug too far into what the credit quality of their users are, but based on the averages that I'm seeing that's posted in their earnings, it doesn't make sense. That's all I'm saying. People who have high income and high FICO scores do not get personal loans, or at least I don't know any people that do that. I trust me, and you guys could do your own survey. Say, hey, listen, guys, if you are a high net worth individual, high income individual, would you get a personal loan at a 12% APR?
Right. I think look, I also brought this up a second ago, but also like I said, Lending Club and all these people are also putting up similar results of large growth in their lending their personal loan business. However, they're also really increasing their expected loan losses. So is SoFi. We even put up our loan losses, I think, this quarter by 60%. But even then, it's a small fraction of what we're actually doing in overall business.
And the other thing I would like to just add to that, what Tanner said, is I guess I'd love to see the data, because this is talking about new originations in these periods of time. But how does that stack up against the originations that they had in previous periods? So, for example, let's say, if they are taking on bad debt, let's say, or taking on low FICO scores in 2022, what percentage of the total loans that they have, or total credit card or personal loans, is that, right? If they ramped it up in 2022 and it's a large percentage, then that's something to be, much more cautious of than if the majority was in good economic times with great creditors. And then this is just a small fraction compared to that, if that makes any sense.
Yeah, that's something that you can actually see, because the total volume of personal loans has gone up. How much? Look it up. You could see it. Look at the personal loans in 2021 versus what it is today, and you're going to see a huge increase, right? So just saying, just take a look, guys.
Bro, if Galileo goes to the moon, we really don't got to worry about
your
this
mic.
shit. So, I was just kidding. I was saying if Galileo takes off, it's going to be the biggest thing ever.
Listen, guys, there's one rule that I try to follow. Right now, they're trading under book, right? If they had such a great business, everything, hedge funds, institutional funds, everyone and their mother would be buying the shit out of these guys, especially if it's trading under book. The problem is people don't have confidence in the book value, right? It's one thing to say this product is worth $1, right? And then you know that, hey, it's actually not worth $1. It's probably worth 50 cents. So on paper, it looks like there might be, their book value is it's undervalued based on its book value. But trust me, Wall Street would not be giving it so much grief if it wasn't for their, suspicion. I don't want to say suspicion, but their hesitation. Also, you got the likes of Warren Buffett. Why wouldn't he just come in and just literally buy up everything?
He can't own a bank. But so that is the real.
Wait, hold on. Would you just say Warren Buffett can't own a bank?
Yeah, he can't own.
Doesn't he have Wells Fargo?
No, but I'm saying he could. You're telling me he can't buy into SoFi?
No, he can only own 10% of a bank.
Right, but he can actually still buy, right?
Yeah, but why would he wouldn't buy $400 million of a company?
No, but you're right. But he would put a little bit of money. If he believed in the business, he would put money into it, right?
I don't think so, no. I think he only plays in the largest blue chips because it wouldn't make a material difference to
Dude, this guy buys furniture companies. He buys furniture companies.
But the whole... So I'll send you a clip after, but he talks about how there's really only 50 companies that he will trade going forward, because they're just... If he was to buy small caps or medium caps, they just wouldn't make a difference fundamentally to his business.
All right.
He also doesn't believe in Tesla.
Bank, so like,
and also other people too, other funds also. Maybe Warren Buffett is probably the worst example to give because he's so big and he could probably throw his weight around. But you should see the institutions. If the institutions are starting to buy up SoFi, that's when I would say it'd be a good time to get in.
Chris,
you can look at Vanguard, BlackRock, a lot of big institutions.
Okay, so one other thing I just want to point out real quick. When it comes to Vanguard, BlackRock, and these guys buy for ETFs that they already have. Like this company is probably in one or two of their indexes. So even though it looks like BlackRock is buying, it's not like BlackRock's like institution funds are buying. It's listen, it's part of their index. Yeah.
So if the ETF is buying while the market is capitulating, that means they're adding to their positions. So the market is selling off generally, so they should also be selling off their positions in SoFi. They're adding to those positions while the market is down quarter over quarter.
Yeah, but that's what I'm saying. New ETFs come along all the time. Also, competitors go down in price, right? Mm-hmm. And other things come up. So yeah, they're always fluctuating. There's buys and sells. So what I'm saying is, don't rely on the ETF like, oh, look, BlackRock bought some shares today as the example of, oh, this means that the institutionals are getting all in on SoFi. No, they're always rebalancing their purchases and their sales.
But don't you think if Vanguard, let's say, puts SoFi into a new ETF that is still bullish, that they do think that that's a good material choice for maybe one of their fintech ETFs or something along these lines?
Not really, because all they're doing is just giving you exposure based on like based on a product that they create. If they will create any sort of ETF, even if it's like the most garbage ETF possible, right? In an industry, like let's say you want a hyper specific ETF where you're investing in a very small segment, they will create that because there is a market for it, right? Mm-hmm. Where some people want exposure to it. So I would not consider the purchases of BlackRock and some of these Vanguards as the catalyst for, oh my God, institutions are buying in. The way that I would say is private equity, hedge funds, if those guys are buying in, that's when you know that, hey, listen, this is something to definitely look at.
So Chris, do you think they are a candidate for a reverse split if they stay under 5, given everything?
I don't know, dude. It's all going to be up to Noto. I think right now the best thing that they're doing, the smartest move that they're doing, is raising as much money as possible via direct deposits. Direct deposit, like me right now, I have TD Bank as my direct deposit. There's probably $60,000 sitting in my savings account that they're probably lending out at way higher rates than they're giving me, right? But the thing is, it's one of those things that just anytime I get a paycheck, it just gets dumped into my savings account, like part of it. So these are the kinds of things that like SoFi is hoping for, where they can take that extra liquidity that's being provided by depositors, right? And make sure that their balance sheets are strong. Because what's going to happen is if, let's say, things go south and people start withdrawing their money and they don't have enough money, then they're hit by a bank run, it's over for the company, right? So they need to be as liquid as possible and have as strong of a balance sheet as possible going into this downturn. My guesstimate is that Noto would probably end up doing a reverse split, but reverse splits are bad. Like that's not a confidence. That doesn't give too much confidence in a company, by the way. If someone's talking about doing a reverse split, not to mention anyone who's got options is definitely not going to be happy.
I know you have some like issues with their main profit engine right now, but what do you think about the whole thesis of what SoFi is trying to do long term? Because I mean, okay, let's say like worst case scenario, they go through all this stuff 2023 and they get hit by a lot of stuff. Like if they get through that, where do you see like SoFi going? Do you think that their business model that they're trying to set up is worth it? Like the all-in-one stop shop?
I mean, it's all about execution at that point, right? Where you're going to need a CEO who can execute. One of the key, I wouldn't say mistakes, but one of the key problems with SoFi right now is their operational costs are crazy, right? Look at how much money they're spending on sales, marketing, and all that stuff. So the question is Anthony Noto going to be able to cut costs where it's necessary and get through the tough times? Because that's the key right now. If you look at every company on Wall Street, I mean, on the market right now, especially on the tech side, Google does not need to lay off 13,000 people. Facebook does not need to lay off 10,000 people, but they all know, hey, this is the time to be, tighten the belts, get capital efficient, get capital conscious, because there will be a time where things go downhill and we need to make sure that we are well capitalized, we have well-stocked funds, and we're not blowing money on things that are not going to generate a return. So I would say it's going to all be on Anthony Noto. And believe it or not, I think the guy is great. The one thing I'll give Anthony Noto that I don't see other CEOs doing, This dude has been a nonstop buyer in the company, right? That's confidence. You look at these other CEOs, bro, they're all selling. They're literally like, Anthony Noto could have sold. He could have sold so much, but instead he actually used his personal money and bought more and more shares of SoFi. So I personally would not short SoFi, not at all. I mean, when a CEO is buying shares, that's not good. I mean, that's not good for the shorts. So I would never do that. Yeah, and like I said, I like the guy overall. I think I was listening to the speeches that Amit sent me. Me and the wife were listening as I was driving from Utah to Vegas. I think the guy's phenomenal. Like in terms of just, he's a great orator. You know, he gave an example of his days at West Point when he was on their football team, the injuries he took. So this guy is an experienced operator. The question is he going to be able to navigate this downturn and see SoFi through the end? I do think that there is a possibility, but I'm one of those types of people that even though I go to Vegas, I don't go to the slot machines. I go to the craps tables. You know, I don't like the thing. So
is it because you go to the crap tables because you're crap at slots?
No, it's because slots have a ton of house edge, and craps is one of the lowest house edges in the possible. So there you go. So you don't know anything about gambling.
Chris, just 2 questions for you. I'd love to get your take on. Look, man, first of all, thanks for hopping on, because I really love the contrarian takes, and I think that, you know, I'm not going to discount that, like, from an emotional perspective. I think it's a solid take, and it's a real, I think one of the most real bear cases that we've heard on this pod so far. I think 2 things that I'm curious about is, number one, since we talked about RIFs, a reduction in force, do you think that SoFi should do one, number one, and do you think that they will do one? And also the second question is, what is the thing on the balance sheet or on their income statement that we should be looking at in the next earnings to see if these, you know, delinquencies are rising, or if their plan is working or not working? Like, what's that number we should be paying attention to?
I would say delinquency rates, right?
If just the delinquency rate alone?
Delinquency rates are the canary in the coal mine for financial health in this business. If you're lending out money that people are not paying back, clear as day, you got a problem. And if the economy is going south, people are losing their jobs, that's not a unimaginable scenario, right? The question is, how are they going to manage it? And the problem right now with them is that so much of their balance sheet is not securitized. Pull that up on the thing on the Twitter, on the tweet.
But do you think securitized?
Bro, I can't stop hearing titter now every time someone says this thing.
Okay, so I want a clarification. Are you saying that we're still holding a lot of our loans on our balance sheet, or that they're not secured loans?
No, that they're holding them on the balance sheet. They're
sure.
Not, okay. So personal loans are not secured loans. Those are unsecured loans, right? Which means that anyone in bankruptcy can discharge them. They're gone. There's no collateral backing it, right? So that's the other thing. Like, I'm sorry, pull up one of the, I don't know which slide, because I posted a whole bunch of on there.
Bro, you posted so much bearish shit today. Wait, where is it? This one.
Listen, all you SoFi bulls, I got you a good deal, man. Okay, so here's their loans, right? Loans at fair value. You can see September 30th, 2022, and December 31st. So this is 6 months. Look at that personal loan growth right there, right? Now look at how much of it is securitized personal loans. Only 97 million. They have $6.8 billion on their balance sheet right now, right?
Right.
So, you know, that is a huge risk. For people to understand securitization, because I think that's one of the things that might help. What SoFi does is goes outside, finds consumers for their loan products, takes those loans, which are in the form of an IOU, puts them all together, bundles it all up, and sells it to private investors, right? Whether they be hedge funds, institutions, pension funds, so on and so forth, right? The problem is, in order for them to do that, they have to have, to get these loans and put them on their balance sheet. They have to lend the money out. And eventually, once they get enough of them, they can start to securitize them. The problem is, if you look at how much of their securitized personal loans were 6 months ago, it was 234 million. Now it's literally $97 million of personal loans that are securitized, right? That are literally sitting on the balance sheet. The rest, they're just holding a whole bunch of IOUs right now. So if the delinquency rates go up, who suffers? SoFi does, not the people who are holding the well, technically there aren't any that much securitized products out there. So
How bad could the delinquency rates actually get though?
Well,
Very bad. Very bad.
look at the historical rates. That's the first thing I posted real quick. Go ahead, Amit, put that up.
So
right there. So if you look at the average, right? And this is going back almost 40, 50, 60 years. We are at the lowest point in 2022 in terms of delinquency rates. If we just return to historical averages around, let's say 3.5%, 4%, 5%, and all that stuff, all of those loans are sitting on SoFi's balance sheet, that's not good. That's really bad.
If the interest rates climb faster than the delinquency rates, then we pay for the losses.
You're already charging 12.25%. Like,
yeah, but
how much
credit cards charge 25%. I mean, if there's no cap to delinquency rates, then there's no cap to interest rates.
Yeah, but that goes right counter to your point. If you raise interest rates, high net worth individuals and people with wealthy individuals are less likely to take on the loan then. Like if you're telling me a person who's like making $200,000 a year and you tell them, hey, listen, I got this loan that's 18%, they're going to tell you to go fuck yourself, dude. I'm sorry,
Yeah,
and not to mention you have other competitors that you have to compete with that may not necessarily be in such a like, what's the word, in such a precarious position, who can outcompete you now because they can offer loans at 10% or at 12%, right?
Sure.
Yeah.
But since we were public back in Q2 of 2020, our interest rate that we were giving out has gone up by 1.8%, but yet our delinquency rates have gone up by 0.8%. So we're actually making more on our loans now in a worse environment than we did back in whenever we first went public.
Brother, this is not a worse environment than when you guys went public. Not at all. Trust me.
So yeah. It at any period in time since we've been public, how about that? We've charged more on our interest rate per quarter than our delinquency rate has gone up. So
yeah, but the total volume, but you guys didn't have that total volume of personal loans, right? You were mostly doing student loans at the time. Right now, the shift has been to personal loans. Personal loans, as we know, are not that great. If delinquencies shoot up, you got a problem, right?
Yeah, but I'm saying the delinquency rate doesn't matter if someone is willing to take the interest rate that is higher. So and they are taking it. So you can say they won't take it, but they've gone up by 1.8%, and delinquency rates have only gone up by 0.8%.
I don't know, man. I'm like I said, we're looking backwards at something that we should be looking forwards, right? Right now, their business is very, very reliant on these personal loans with the delinquency rates at super all-time lows. If that delinquency rate starts to climb, we got problems. I'm not, by the way, I know someone's like, oh, why the hell is he smiling? The reason why I'm smiling is because I'm at a point where I'm trying to understand what kind of borrower who has a high net worth or who has high income goes and gets a personal loan. Like the minute, if I'm a high net worth individual, me and my wife, we make over a certain amount of time, we actually would qualify as the target audience for SoFi. But the minute you tell me that, hey, it's a 12% APR, I would be like, what?
My biggest disconnect is that either people are buying these loans. We're seeing not only more people buying the loans, but more people on a percentage basis quarter over quarter buying the loans than ever before. So it's growing faster and faster every single quarter. So people are buying the loans. So you either have to take a position of they're cooking the books, or
you got a ton of consumers, or a ton of consumers are in bad positions in life, and that means that they're doing everything possible to get a loan so that they can weather the storm. Because if you look at the other thing, which is how much credit has gone up, look at the amount of credit. Like, I have to look it up on the Fed's website, but basically credit utilization has been skyrocketing, right? Savings rates have been dropping. Credit has been skyrocketing. So if you think about it, most of the people that are probably getting these loans right now, they have no choice. They're like, listen, I need this money just to survive. But at the end of the day, if their economic situation does not improve, They could just declare bankruptcy, and now the entire balance goes on SoFi's books. The one good thing is that the loans are not like crazy amounts. Like the total loans that they give on a per person basis is actually relatively small. Like imagine right now, yeah.
I have the number. I'm wondering what, because I thought they were pretty sizable. I mean, it's only a personal loan, right? But $24,770 a loan.
Right. That's not that bad, believe it or not, considering that if you look at like a mortgage,
it's no home loan.
If you look at a home loan, the thing is, when you have like something like 24,000 and this many you have a lot of diversification. So what's unlike the mortgage side, where let's say you give out a $500,000 loan, they're only giving out 24. So which means that now you have a lot more people have to pretty much go default in order to be on the same risk level as someone who was issued a $500,000 loan. The difference is the person with a $500,000, let's say home loan, there's an asset that's backing it. There's the actual home, there's the property. This, it's based on just credit.
Yeah, I think there's no difference between a secured loan versus an unsecured loan if the interest rates are going to be high enough to pay for the collateralization. So, like, we still have to take on the house.
Say that one more time. There's no difference between a secured loan versus a
because either we take a secured loan at 4% right now on home loans, or we take a unsecured loan at 12.2%.
Yeah, but the risk
makeup of the difference in the loan is our security.
But see, that's what I'm trying to understand. The rate at which these things default is really bad. It's really high. And especially in economic times like this, it gets really bad. I understand what you're saying, that, hey, higher the risk, higher the reward, right? You're taking more risk because you're issuing a personal loan, which means that, yes, you are allowed to charge 12.5% for a personal loan. But all of that stuff is going to be meaningless if there's massive defaults. That's all I'm saying. So once again, I gotta go, guys. But look, I love your SoFi content, but just be more skeptical. That's all I'm saying. I do want to say that Anthony Noto, out of all the people that I've listened to when it comes to running a company, the guy seems to have a good head on his shoulders. He knows what's going on. He knows what he's doing. My only thing is, he is in a position where he's got to figure out how to weather the storm, because every company right now is trying to figure out how to weather the storm. So I think comments from Anthony Noto in the next quarter, next earnings, are going to be a telling sign where SoFi is headed. So yeah, and it's the same thing with a lot of companies right now. Good CEOs will figure out how to weather the storm and come out stronger. Terrible CEOs will sell their stock, tell you to go fuck yourself and declare bankruptcy, Chapter 11. And that's all she wrote. That's all.
Sure. Yeah.
Chris, really
I think that's a great point for, what we did exactly whenever, student loans went under. We pivoted and found a way to continue going.
Exactly. If that's the example that you want to use, that's perfect right there. You need to have people that pivot. Like right now, I'll just finish up before I go. Like Open Door right now. Open Door, you see Eric Wu, he's been selling, right? Like literally just selling. He's not one bit, hasn't been a single transaction where he's buying. Also, Open Door is sitting on all these properties, but guess what? They need to shift. They need to start working out a way that they can actually make money. Otherwise, they're going to be insolvent. So all I'm saying is, at least with Anthony Noto, you have a guy who supposedly can execute, and he's shown in the past that he knows and he can pivot. You don't want a rigid CEO who's like, I know best and no one else can challenge me.
You mean like Alex Karp?
Shut up.
Chris,
that's all.
Chris,
yeah.
I think all the points you brought up were fairly solid, and I'm definitely going to go take it back and do some homework. But I know you did a good job as a bear when the moment you came on, and until now, the chat has just been fucking arguing back and forth.
Bro, there's some people who are like, if you can't listen to Chris, you shouldn't be in the chat. Like, Chris is good. The other people are like, hey, Chris, don't let the door hit you on the way out when you leave.
The reason why I don't like, that's why when you guys said, oh, come on the chat, that's why I didn't like, because I'm a very controversial figure. Either you'll agree with me or you won't, but I'm great for content. I'm definitely a bomb thrower. You
Well,
know, if you
hopefully
got
you
a
come
bull
onto my
thesis,
channel
yeah.
and we can argue it out on a couple of other points because
Yeah, I need more haters. Please send more haters my way. I don't get enough Twitter DMs telling me to go fuck myself in the Palantir.
all
people
publicity is
already.
good publicity.
No, it's not. No, it's not. All right.
I love
See you
it.
guys.
See you, man.
Thanks, Chris.
All right, raw thoughts after that. After what Chris said.
Well, that made our episode a lot more fun.
Yeah, no, it also made me think about the five person thing because honestly, I didn't even want to give you guys any time to talk because I had, you know, he was bringing up point after point, and I was like, I want to say something. I want to say something.
No, it was great.
It's hard with so many people, especially with the contrarian view.
I love having actual like solid logical bear cases though.
Yeah.
I never want to echo chamber, like silo myself into having a bullish perspective on a stock because I'm always like scared that I'm missing something. And so I really love that he was able to actually bring some stuff that are legitimate concerns going forward.
Yeah.
Right. Yeah. I mean, if you don't get the other side, then, you know, you kind of are just looking for confirmation bias and you're not going to realize why your investment went down or something like this. But you know, I'd also like to talk about, if anyone wants to speak on this as well, is the stress testing that we have now that we actually are a bank. Do we believe that's even efficient? Like if the Federal Reserve is making us do these stress tests and they say, you know, banks are doing well and everyone's fine, is that something that we need to worry about for the future? Like, you know, he brought up 2008. Do you think we've learned anything since that time? You know.
Yeah, I mean, you have stress tests all day long, but then when a bank run is big enough, you're fucked. So it's just, I think 2008 proved that. But with regards to, yeah, I think that's my stance. Depending on how big the bank run is. And I think, you know, it was one of the things that Chris said that was interesting to me was that he was saying, hey, we're in good economic times right now. And the rates are like what, almost there are 4% or something like that. And the bad times or the pain from what's happening right now in the market is going to be felt in the economy in 2023. And so that's where he's looking forward for those delinquency rates. And we're just going to see, I guess, you know, how much these layoffs today result in, you know, bank runs and delinquencies in early and mid 2023.
I think something important is that SoFi, if they were all on their single core, they would have, out of all of the competitors, the most agile business where they can just go and push so many different types of products to try to get a better balance sheet. That I think the most important thing for them is to just get on that single core. So their ability to be agile and offer different products, whether it be like an investing or like a credit card solution or buy now, pay later. I don't know, but they offer so much more that they have a little bit more leverage in that area. But yeah, I don't know. Since our main profit driver is personal loans right now.
And you know what? Like I'd like to see a chart because I want to actually look into this. I might even make a video on this. Is what's the actual amount that we have to hold, and what's the default rate have to go up to for it to actually cause a catastrophic failure? And without knowing that, we really don't know much. And how long will it take to actually get there before, if that is, for example, you know, something that could happen that Noto doesn't see, how long until we could actually diversify our businesses into our tech platform or even our extremely fast growing financial side that might, you know, diversify our earnings a little bit?
Yeah, and look, we know, especially like in the context of the student loan news, that personal loans is going to be the bread and butter going into 2023. And so this situation is going to permeate into 2023 further. In my mind, I'm just thinking about like, okay, what does that unemployment rate need to be for those delinquencies to actually manifest? So I'm just echoing on Tanner's point there, because every layoff that we're seeing in the tech space is pretty concentrated in that space specifically. And it's a lot of like support staff and extra staff, just bloat that's now being fixed. But when you actually look at the unemployment numbers on aggregate across all industries, then they're still fairly manageable. And so I'm just wondering in my mind how far out we would be from that point of no return.
Right. And like I said, our expected loan losses have ballooned this quarter, expecting another 60% increase in our credit loan losses. And so even knowing that fact, it's not that we're saying or that we're oblivious of the fact that default rates are climbing, but that, what percentage is the actual, painful spot. And that's really a hard thin to look at.
It begs the question who SoFi's customers are. Are we gonna be? Are a lot of SoFi members gonna get fired? I don't know. How do you measure that? How do you
you just take whatever the unemployment percentage is and you just apply it to, so like if you want like really like super rough numbers, right? You're just a random slice of the population. It's not to say like, oh, if they're higher income, they're going to be fired more or less likely. I don't think you can come to that conclusion on a like quantitative basis.
I feel like they have some sort of data or model to really figure that out, because every banking member or every SoFi member has to put their business sector or like their employment sector where they work for. So I don't know. They probably have some model just where their exposure is for their members are employment wise.
Yeah, absolutely. I think, look, let's just take it from a logical stance. Is it a problem or is it not a problem? I think we've established, okay, this is a problem in the macro, and then you have to apply it to SoFi. How much bigger of a problem is it to SoFi than every other bank? How big does it impact SoFi compared to all their other product lines? And what is the point of no return in terms of that flipping to the other side to actually affect SoFi negatively financially, right? So I think, one of the things that Tanner was saying was like, hey, look, we're taking more risk, with the loans that we're offering, but we're also getting more return for that. And so it's like, how bad does it need to get for that equation to flip on the other side?
Yeah. Yeah. And obviously our financial side does not make up a big portion of our business. I think it went from, 8% of our overall revenue last quarter to 11.5% this quarter. But year over year grew like 200% or something along these lines. If options come, that'll go even quicker. And yeah, it's great to see, a bear case, but also I'd like some time to, almost make a video about this sort of show. Obviously, you know what? He obviously has a point. If the stock is going down, people are selling, capitulating because of these ideas. So it's really on us to defend ourselves, to say, hey, this is why you should be, still maybe bullish, or this is why I'm bullish. Not you guys. All of you guys can sell, but I'm just talking about myself.
Yeah, I mean, Chris brought up a lot of good points. I didn't even realize a lot of these loans and personal loan ideas. The delinquency rate was a historical stat that he put up that I think added a lot of context to this. Ultimately, did Amit sell SoFi? No, I didn't sell SoFi because I trust in Noto, right? Again, Chris made a great point about Noto buying. Chris made a great point about Noto being an exceptional leader. If for example, Upstart, I think that's an easy sell when you realize their AI-based lending business is BS, also because of management, right? Does they have the management to execute this? I don't think Anthony Noto comes out in a year and says, the company is bankrupt. Sorry, I did the best I could. I just don't see that happening.
And also with banks, it really can't happen that way. There's so many feats of protection before that even happens. And the Federal Reserve will be very warning to us that problems could be arise, especially, I mean, this might be a point of splits a room, but I think after 2008, it'd be very hard to repeat that same mistake twice. And I think even Chris brought that up in the chat, not in the group, but he also said how I said that SoFi as a company is a AAA rated lender, where he said, MBS, markets back in 2008, AAAs were also filled with junk bonds, and which is true. But I think if I not remember correct, or maybe I don't remember correctly, but I'll have to look it up. But there's been new regulations set, so then that doesn't happen again. So I mean, until I actually have the facts, it's just going to be based off faith. But hopefully, I can find it, and maybe that'll be a really, really good, SoFi Weekly next week, whenever I explain my bull case a second time, or I say that I sold.
How much did Anthony Noto make in that Twitter sell? I think
it was 125 million. That's what we said.
Okay, so he should be buying more, I would assume.
One thing in me is he knows there's going to be a reverse split, and then he's waiting to buy. I mean, because it would suck for him to buy the stock and then we do a reverse split, right? That would be
yeah.
What's
Yeah.
the difference, man? He's not trading it. Who
Well,
cares?
He knows people will be like more skeptical of SoFi after reverse split, so he might want to like start buying after.
Or get
I
a
don't
better
know.
price after. It's going to go down 20% after reverse split.
Oh, that's true. Yeah.
Oh, like psychologically, you mean? Like people are gonna.
Yeah, people.
But it
People
doesn't
are gonna
really
sell the
matter,
fuck
man.
out of the stock
He
after
was
the
buying at 9. He was buying at 8. He was buying at 7. He was buying at 13.
Yeah,
I don't think it really like.
I think that's a great point. Like, I don't think his purchases are changing anyone's conviction. He bought all the way down. It didn't change the stock. I think who knows
yeah.
what he's doing with his money, right? All CEOs have some sort of work with their own capital, right? They could be buying a new house in this market. There's other investments to be made. You know, it is a good sign, but it's also not the only sign that the company is growing. How about phenomenal triple beat quarters? I mean, you know, let's not forget the amazing quarter that we had, continued to have all the way through, you know, for the 3 last years where we didn't even have our main core business. And then you go, okay, well, you know, can Noto execute? Well, I think you should be given some execution credit because he has been able to execute in maybe even harder times than what could be coming forward.
Yeah, and look, one thing, you know, that I sort of got from Chris is that us as a podcast going forward, you know, when we're looking at SoFi quarters, I think we should also really talk more about like the delinquency rates, how they have been throughout 2022 and how they are changing. Like, I think that should be a metric that we should be tracking way more closely.
You can check out Future Investing's channel. He covers that every quarter.
Oh, is that the SoFi guy?
Yeah, that's the SoFi guy. So, I actually have it on my screen right here. I got all the delinquency rates, average loan balances.
By the way,
earned.
I laughed out loud when earlier in this pod you had red behind you and you were taking the bear case, and then I was sitting in silence watching Chris and you go back and forth, and then you were defending SoFi. And as soon as I was like, oh my gosh, there's green behind him. I was like, it just made me laugh really hard.
You always have to steelman an argument for sure, right? Like, I mean, even if I am a bull of a stock, you still have to go, okay, well, you know, what's the worst that can happen? Because you're going to get caught out if not.
Yeah, and like I think all of us were pretty receptive to, you know, what Chris was saying, especially because it was backed up by, you know, numbers. I saw a bunch of people in the chat getting, you know, really emotionally defending whatever stance they had. And I just think that, again, to reiterate, it's really good to bash your ideas and try to poke holes in them and actually have the other side of the argument, because it makes your conviction way more comprehensive than just blindly being one-sided.
Yeah.
Yeah.
And all of
All
our
right, we gotta
bad, so
we
we're wrapping it
gotta
up?
end it there. Check out everybody in the chat or in the description. Everyone does a lot of work understanding SoFi. Riley's becoming a SoFi Twitter influencer. Tevis is awesome, and Tanner is he's the numbers guy. He knows all this stuff. So thank you all for being here, and have a very, very good Thanksgiving. One question: me and the boys are coming from NY soon, from Toronto. Need your opinion. Pizza spot. What's your fave? I don't know too many in NY, but in New Jersey, if you come, there's a lot.
I love how that was the one question that you're like, oh, pizza.
Wrap up pizza spot.
I'm a Jersey boy, man. Pizza. Pound Tour Weekly. I know Pound Tour Weekly. Any last words from you guys? Anything you want to say before Thanksgiving?
Happy Thanksgiving.
I won't be here next week, so enjoy the pod without me. You can get some peace and rest. Probably have a guest who's way smarter. But yeah, all the links are in the description. I'll still, I think, be releasing an edit video on Sunday. I'll try.
Tevis's edits are very legit. His supercuts are phenomenal. It's amazing, amazing stuff. Tanner,
go check me out. So
I'm a shill. Yeah, please subscribe, bro. Every video, Tanner's just like, I need them to subscribe to me. Subscribe. All right, subscribe to Tanner. Like, we need you guys to subscribe to Tanner. We need that to happen. All right, awesome stuff. Thank you guys. We'll see you next week.
bye, guys.
Adios.